That's fair. That's fair. That's fair. I like that. I like that a lot. I can't lie. That's good work, man. Um, that's great. And then in terms of trading, what are you looking at for that? Yeah. If you're just going by as well, you can just say that. It doesn't really like if you're just like what's the word? Like you know what I mean? Floating. Yeah. Okay, okay, okay. Yeah, that's cool. That's cool. Okay. Fire. Yeah. To yeah, yeah. For sure. I get that. I get that. I get that. Okay, okay. Jeff, what's up? I mean, I know most of your ideas, but you know, you could briefly just go over that as well. Mm-hmm. Fucking let me add this. 'Cause I didn't even pull up the stream for you. Let me pull it up for you. I bet. Oh, you and Perplexity. It's hilarious, man. Ooh. Put that up real quick. Let me check something. 'Cause I also noticed something as well. Mm-hmm. Right. Right. Mm-hmm. Right. Mm-hmm. Right. Mm. Yeah. Mental health. Hmm. Right. Mm. Mm. Right. Right. Mhm. Yeah, lungs look bad. Yeah. Yeah, yeah, yeah.
You saw it build up support around 4K, which is really nice. And
Mhm.
again, the debasement trade's not stopping. And like I was saying, the only solution here for them to get any of the other things to happen is printing more money. Or again, that's the only way they say handle a soft landing. Essentially, you need to
Right.
print more money, which is going to happen given the fact that we're already 37 trillion in debt. And then now he's promising $2,000 to every American off of the tariff money we don't have.
Mhm.
Okay, cool. So again, the dollar is going to continue to get worse, but I just want to kind of see how the price starts to play out. Like my bias is still positive. I just like I feel like it's so. That's why I love being able to call this. I literally called this shit in August, so I'm like
Mhm.
I love calling this shit out earlier, and like you can see from then like the plays just go on. But once everybody starts to talk about this shit, it makes everything hella janky because now it's just gonna trade differently.
Right.
So kind of still cautious about it, but I'm still positive on it. Like I was saying, there's kind of this bottoming out and still higher demand for the dollar, and we're probably going to see this trend continue if we don't see any. I mean, if we don't see any printing immediately come out. So we're also seeing a lot of negativity come, or like a lot of negative volume come in right now.
Mhm.
So hey, well, again, still waiting on this. Sam, Sam, what did I
Actually
say?
just destroyed itself. You know, I'm actually tight
It,
that
it
I removed my spy puts as
Mhm.
well. Remember when I put spy puts back then?
I
Like back,
mean, it was smart. You have to cut your losses, but
yeah, but back in
it's time now.
August, man. Oh my God. Imagine I held those
So,
puts. Fuck.
Chigo, I'm not sure if you're here, but this one's a good one. Yeah. Okay, perfect. The Bitcoin
Currently
short,
streaming on Kick,
and it's funny, even my
YouTube,
junior PM
tune
literally
in,
hit me, and he like we are
links in
literally
the bio.
wavelength on this trade.
Same
But
thing with
essentially,
everything. Jump in, we're back testing,
we're
going over
at this
macros, we're doing
funny
everything.
point in the Bitcoin halving cycle. But it's essentially it's a big part of Bitcoin's economics. Essentially, you'll have these major grinds up into the halving. All you really need to know about the halving is that it's an essential portion of crypto's kind of foundation, where there's only 21 million Bitcoin ever actually made. Um, and in these halving periods, which last maybe approximately every 4 years, they cut down on the amount, or literally in half, essentially the amount of available, or they make it essentially more difficult for them to mine by increasing the cryptography on it and increasing the encryption, making it more difficult to mine. So they're again slowing down the supply. So basic economics, the demand is almost infinite now that there's higher capital inflows from ETFs being made, all kinds of like again, people's 401k money is now siphoning its way into Bitcoin. Like
Alright.
there's a shit ton of liquidity going into it, and it's only going to continue increasing with like geopolitical adoption,
Mm-hmm.
and the supply is continuing to shorten out. Essentially, there's always these periods within these cycles that show that it's going to drop off in price and debase given whatever the market, like whatever kind of situation dries up the amount of liquidity, but you will continue to see this trade happen over and over again.
Right.
And we're literally at the perfect point for literally to drop again, or it's like not perfect, but it's literally the exact timeline in each cycle where it drops off. And so we already saw it expand, and now we're just seeing the crush start. And there's a really good video for it. Um, and he overlays literally all of the past cycles, showing the drop off until approximately, I think it's about July, June. Yeah. But yeah, the 1 year, 7 month period in between each cycle. And then you can kind of see videos. And so these are all of the previous cycles, literally since inception, um, of prices alongside the halving cycle. And so given this is the current date where the top's already in, we probably could have gotten way better at like 125 or whenever it was higher, but it's okay. The trade's still on.
Mm-hmm.
But essentially, you don't really see continuous positive price movement until it bottoms out in around July for each scenario. And then you get a lot more into the halving cycle because then it creates a bunch of tailwinds that people start saying, oh, okay, now it's a little more likely to go up. And so obviously the volatility or the amount of volatility is determined on the amount of money, what kind of the state the cycle the economy is in. So it's kind of give or take how the price plays out. But again, this is really just the basic economics of it, and we're kind of what I'm just gonna wait to see it crush down. And so that's why I have my puts up for I bet for like March 20th expiration. So it's like, well, at least still get a majority of the move downwards beforehand. And like, I've already gained a shit ton of premium from buying right now. And that's kind of the crypto move. And crypto's also very highly correlated with the NASDAQ as well. So once the AI bubble starts popping and we actually get like way more news releases, which I'm just waiting for a catalyst. And it just started already though, because the government already blocked Sam Altman's request for government backstops. So it
Mm-hmm.
just takes essentially it just needs to be one major fuck up from OpenAI or a change in sentiment where people realize, hey, they're not actually really doing anything. We're able to generate any money, and we're going to see them pretty much shit themselves. And literally, when there's an interview clip of him getting hella defensive when they like started asking him about how to make like revenue, and it was like another guy on the same board. It was the funniest shit. Oh, there you go. And oh yeah, the Fed also held a secret meeting to talk about the repo markets. And like I was saying, bond stress is literally fucked. You guys understand capex?
I don't.
Yeah. Capital expenditure, the amount of money they have, the amount of excess money they have to spend on like facilities,
Oh, okay.
operations and whatnot.
Okay, that makes sense.
Perfect, perfect. So yeah, it's another
Basically, show how
perfect
much
count.
free cash flow.
Yeah, yes, perfect. So literally by the book. And so what we're seeing with the AI trend is we literally had all of these leaders in tech just literally slaughtering their entire books with just throwing money into AI CapEx, but not seeing any productivity returns whatsoever. And
Mhm.
so now we're continuing to see a divergence. And if you look into Meta's earnings, you would have saw like I think it was like negative 10 billion or something in free cash flow. It was some crazy shit. And like you're just continuing to see that trend of them again, .com 2.0, like buying all this shit up, but it's not really producing anything, and they're kind of gonna just wait for the market to essentially realize it. And so now I'm just kind of waiting in, which is why the Bitcoin trade's my highest conviction. But you're gonna see this continue on, and then we can finally see the Nasdaq crack. But it depends on how hard. So that's why my gifts up to like February, unless the Fed's able to pull something off. But I don't think I think Verizon just fired 15,000 people. Like it's hitting every market. It doesn't even matter if it's like tech for real, for real. Like they're just gonna keep seeing layoffs. So we'll see. And so one of their main tactics are kind of like, and it's super funny. I love being able to kind of like read into their psyche because they only have oh so many options when they kind of back themselves into specific corners. But they're more likely to go public than they are to be able to continue going on with the cyclical economy they have now because it's just more promises so that these bigger companies can continue to commit accounting fraud and just act like they're making more money when they're basically not, and then make more promises to then gift more money to buy more chips to then send more money to OpenAI for them. It's just the same cycle until one part of it cracks. And so
Mhm.
they're more likely to go public than to even be able to make more revenue because they're only like they release Sora AI, they're releasing some type of chatbots and other stuff to try and make more money, but it's not enough to make like sense of any of the spending that's going into it. And so I think yeah, it's just whenever that catalyst of them seeing reduced spending will be kind of the best, which is why I'm still. Oh yeah, and we'll talk about kind of my macro goals for Q1, but I'm targeting. Actually, I can bring this slide. Did I bring that slide? Yeah, I do. But I'm targeting energy or renewable energy mainly because obviously there's so many pickups in data centers they're building and all this other stuff. Like AI has driven energy like usage into the sky, and it's only going to continue getting higher. But of course, the underlying companies that can make more money off of this,
Mhm.
um, paid off of the back of it. Additionally, gold mining
Uh,
companies.
wait. I just wanna add a quick.
Yeah,
That is one of my biggest reasons into going into renewable energy or marketing as one of the biggest industries that have the most potential. That's that's my exact reason.
smart.
I fuck with that.
Lagging a
I fuck
little
with
bit, but
that.
that might
Using the
be
bigger picture as your current mode. I like that. Worked out a
that's
lot.
really smart.
Honestly.
Q3, you're seeing way more debt. It's only
Bro,
gonna
it's
get
bad.
worse.
And
People
then
spend
what? I
more.
heard some shit that he suggested what a 30-year, um,
Oh,
what,
50, 50.
bro,
Let's add
50
more
year.
tax. I mean, let's
Yeah,
add
that
more
I
loan premium.
I seen that 50-year
Let's give
shit.
people more debt.
I'm like people are barely paying off the 30-year. How do you expect people to pay off the 50? And then where does the
Make
money
them no, no,
go?
make them pay. Oh my god, I'm so happy you reminded me of this.
Like I seen that
There
shit and I
was
was just so I'm lost why this was an option.
no, there's a clip that's so good because Big A made a vid on it, and it's like you would be paying the price of the average house on top of what you're paying for the house across the entirety of
Like
it.
literally, like it's so stupid.
It's
Like
like,
how
bro,
do you how
what?
do you make apartments look more appealing than housing now? Like how does that make sense?
I mean, at this point, you find an affordable one where it's rent controlled, you stay
Yeah,
there. What's the point? Or if you could get a 3% down house that's not over,
that's not
might as well.
I seen 50. I'm like, people were barely getting through the 30 year, bro. I think there was like a study that shown that on average people don't stay in their house more than 20. Yeah, it was Graham Stephan. It was that video. I think it was fucking
Alright.
whatchamacallit. I think it like there was a study that people move out of their house after 20 years or something like that. Like they don't even meet the whole
Yeah.
fucking term period.
The average home buying it right now is at 40 anyway. So it's like
30-year fixed, 50. Like what is that? Like what are those numbers, bro? You paid $400,000 extra in interest. Ridiculous, bro. Ridiculous, bro. This was a
and so
ridiculous.
yeah, it's some dystopian ass shit. And obviously this has been the indicator to every fucking recession ever.
Like,
So now I'm just kind of waiting for things for shit to hit the fan. Bitcoin's my favorite short out of it, which is why I'm playing the options on it.
I like
The
that.
portfolio, like I was saying, is going to be around defensives, or I was literally getting it to do this. Oh, again, y'all need to just start abusing perplexity. Like buy the fucking premium shit and just go crazy with it. Because now it's like I have it literally collect all the stats for me and they give me like expected returns, run math models for me, and
Fucking
have
wow.
everything kind of looked into. And so the point being is I literally can get it to just find me the highest or literally I ran, did I run it? I gotta figure out where I just ran it.
Wait,
Yeah.
wait, Jeff, you said Bitcoin is that because of the research indicator, you're looking at shorts for Bitcoin and what?
I'm looking for shorts on because of the fiscal economy or like where we're at in the economy, I am negative on NASDAQ or like tech
Okay,
stocks overall. And then Bitcoin's because of the halving cycle and it's just like it's regular cycling in price because it was
Hmm.
in
okay,
economics.
I will be right
okay,
And
that
here.
feel
makes
free
sense.
I
to
will be keeping that in mind for some puts. What is this? What is this like? What expression you can end the year or just
Mhm.
longer term?
Or no, I told you I said March. Like
March.
my
Okay.
long term, it'll bottom out by July. Like starting July, it'll bottom out.
Okay. Cool.
But my options are for March 20th because I just have good premium on them and it's a good entry.
I like that.
But
I
you can
like that
honestly play.
honestly.
You can really play. Or that's why I was showing what is it called SBIT charts other time. But really look at the calls for May are already doubled
Just
from
increasing.
October.
Yeah.
But yeah, and so this is the inverse ETF for Bitcoin, and of course long term it's down, but obviously it's just going to keep on seeing growth into
Into the
as we
next
see
year.
it kind of play out. Because mind you, look at the setup now. Like
Yeah.
this is
This
right
is
now.
it's broken a
So
lot of levels. It's broken a lot.
does
But
does not care. We're coming down here minimum, hopefully within the week, and then if not, and then we just shit our way through. We're getting paid.
yeah.
Simple as that.
Oh yeah.
And so bonds as well. I want to
Getting
stay away from
paid.
like it would be a great play because of the amount of stress going into the market, and it's a great hedge against inflation. But it is kind of getting literally crushed globally. So I'm staying the hell out of bonds right now.
Mhm.
But once we start seeing like comfortable, this will be a big play. Once we start seeing comfortable cuts being made continuously, but there isn't as much of a higher likelihood of a cut given we're already seeing inflation higher, and we don't know. So I want to see what the Fed does.
Mhm.
And then oil's kind of an interesting one. I do have a feeling we're going to continue seeing deflation, but who knows if they write I was about to say some dyslexic ass shit. I
Yeah.
was about to say right. Fuck. But I would want to kind of see what the geopolitical outlook looks like because apparently they stopped the wars. I'm not so sure about it. So the Middle East is an interesting time. I don't have enough info, honestly. And the last time it went negative was COVID, which is really funny. So I kind of want to see how this plays out with us kind of I guess maybe starting to see more inflation play out, but it doesn't really look too strong here. So it's 50-50 really for me. I want to read into it a little bit more before kind of taking that. Biohaven and some of the other stocks and other places. The rest of my list is kind of like other like capstone ideas, and then this is the Mag 7 in green. But I just like looking at the main tech leaders to kind of just get an outlook for where we're at. And yeah, most of them look like they're ready to bleed. I just need to see them kind of break and fall into these areas. But Meta's already fucked. Tesla's on the brink. Apple's stronger right now than most. Nvidia's also stronger because semiconductors also still have underlying, like they're very much tied to a lot of the tech companies, but it's still more likely to play out stronger than like general tech because they're just still selling the underlying chips. Same thing with Microsoft. They just have like a lot of software dominance. So even though it's like they're integrating AI, which I honestly feel like they're still going to end up becoming another leader of it anyway, with how they are with most kind of plays anyway. These are just long term. Again, my visions on tech still negative, and then
Mm-hmm.
wanted to work on those quarterly plays, like I was saying for the swing portfolio. So yeah, kind of swinging Bitcoin short, and then we're looking to, or my long term is going to be buying up gold mining stocks. So GDXJ is going to be my main focus. Um, because again, they were selling and they showed their earnings where the average price of gold sold was 3,500 um across their last earnings for that quarter. So mind you, the price is only continuing to go higher, and they're still lagging in terms of the price that they were selling their gold at redistribution anyway. So their revenue growth is just going to continue. You're literally going to see so much revenue growth into the quarter anyway. So
Mm-hmm.
they're still poised to grow. And that's why I had this prompt where essentially I tell it to look. I have it use a hidden Markov model. I have it use econometrics. I have it use expected value calculations. Then I just literally throw that into the prompt and tell it to then analyze the tailwinds. Tailwinds and headwinds are like bulls and bears essentially. Headwinds is bears, so it's like any possible like narrative or any type of signal. So it's a factor investing strategy again, where any kind of signal that comes out will then have it play out lower for its expected value, and then any tailwinds or any continuous amount of tailwinds. So, for example, like I was saying with energy, you're going to get way more money from over time, more energy demand, of course. And so that's kind of how they play out. And so here it's projecting that actually uranium's going to outperform solar. Solar was one of my main research points for the quarter. But if they're going to see this massive growth in uranium, I'm looking for uranium stocks to buy. And the good thing though right now is the main one I was looking into, which is ULNM, the overall their miners ETF, as long as it can drop down to here. And year to date, they're 32%, which isn't bad. But if they're poised to make massive gains, or even for example, April, like post tariffs, oh, literally from tariffs, like after that mini recession, they've doubled in price anyway. So
Mm-hmm.
mind you, we can just capture like some momentum off of a bottom and just ride that play up, easy money. Because of just again, there's just going to be underlying demand usually for it. Same thing with gold. So now we're going to see the same thing with the miners. So the mining companies are going to continue to project higher revenue, given that the underlying assets that they're or commodities they're selling are just going to keep on climbing in price. Especially because now the only way to save it, it's win-win essentially because these are still necessities, like their services or their values are still necessities in the time of recession. But if they do kind of work for the soft landing, they're going to print a shit ton of money, which is still adding to the debasement trade. So these are real assets denominated against the dollar and are still going to be poised to gain more money off of it anyway.
Mm.
And yeah, so kind of wanted to replace my solar play with a consumer defensive, but I still need to figure out what has the highest detailing. But we can read through some of these as well. But it's kind of my macros. To sum everything up, we are in a recession. No matter what bullshit they try and tell you, they're laying everybody off. There's massive amounts of debt being there's so much debt actually being absorbed. I want to find the Infonomics video because he explains repo price. Like I'm still learning much more about it. Like I understand it, but I don't think I'm good enough to really explain it the best with the repo market and the Fed and essentially how that money moves across. But it's just all tons of stress. An emergency. And so, kind of, will spare you guys the time, but it's like still with my underlying thesis on dollar demand. And of course, high dollar demand will lead to deflation as well. Because if everybody's holding dollars, it's going to continue to reduce the amount of spending. Companies will then see less and less revenue as people are spending less money or pushing their money more into defensive sectors. So, obviously, tech and all the hype, all the like happy shit is going to go straight to hell because now there's nobody spending their hard earned or really needed money at that time. There's less disposable income. And so it's either shit hits the fan, and of course, this stress gets much more heavy to the point that dollars become much more valuable, given that everybody's looking for them, but they're not rolling it out, or they stop or they move into quantitative easing and they print a shit ton of money, which is going to lead to a bunch of inflation, but will actually also help the market from bottoming out, which then again will still also help benefit the other plays that have less defensive, but mainly gold and energy, because it's still going to cost a shit ton as well. So, kind of my underlying macro analysis, and including through a couple of the last of these tabs. Um, like I was saying, capex is also just another issue. Same reason for my Bitcoin short. Um, and negative still on both of those. Consumer sentiment. And then here we are at all-time lows. um, it's just only going to continue to get worse, and it's just another indication of demand being in the shit.
Mm.
And demand, and actually, let me see, consumer sentiment versus GDP today. Because there's a good, I'm trying to look for the chart. Oh, here we go. Funding sentiment, because it's pretty indicate, or like, I'm trying to find a good chart for it though. But it's a pretty good indicator essentially of the consumption portion of GDP because, of course, literally right here, consumption makes up almost 70%. And obviously, if you have everybody telling you us we're not going to spend our money, it doesn't read well into GDP overall, and obviously for the economy. And then once the evaluations for companies and obviously the majority of other stocks start seeing the issues with that, we'll start seeing the market correct itself. And that's why I'm also really interested to see what IWM and the Russell does because it's only small caps. So the impacts of what's going on in the market will way more early, or they're going to be much more early for the 2000 because they're not being propped up and exclude all of the most or the richest essential leaders. So we'll kind of see where this goes from now, but this is like another one of the major things to watch. Yeah, some standard. So I'll look at what happened specifically on Friday. Sector rotation. Yeah, so you can see the sector rotation trade happening as healthcare was up, energy's up massively. I'm starting to see kind of out the profit taking, right? So it's also just regular rolls, corporate debt. Oh yeah, and there's also been a massive amount of private credit failures in the past week, where now we're clearly seeing a lot of these companies that are taking out this debt, and it looks safe and look perfect, all this other shit, but now they're defaulting. And if companies are defaulting on their on their debt, and more people are starting to again, individuals are taking on more debt, and it's reiterating the fact that we're in the recession.
Mm.
But investors group will materialize with odds dropping from certainty to 50%. So yeah, now there's too much hawkish sentiment going in. Not it's not as likely. So we'll just still see, and I want to keep monitoring as we go. Um, oh yeah, this should be some bullshit. Hold on. Sometimes it definitely does hallucinate a lot of the time. You gotta like lock in. And so, I want to kind of look into what defense stocks look to have the highest value. And then for context, my long portfolio, so once all of this corrects, is FNGO, which is leveraged on FANG, SMH, which is, I'm sure it should be correct. Let's see what I said. But semiconductors as well. But yeah, she should be right.
I will say
Kind of right
a
these
lot of these option plays, these portfolio plays, definitely you gotta put that in the Discord, 100%, so that we can have it kind of accessibly. Yeah, so you see how you just went through the analysis. Throw that. You gotta throw that shit straight into the options channel, cause we need that. Actually a lot of pure analysis
Oh,
that
that
you can't just let go.
option. Q1, 26 projections. We'll update your data. Oh, perfect. Yeah, I'm gonna write it this. Oops. Seven, simple.
Okay. Cool.
Yeah, let me run through this. Healthcare does make sense. Defense, but form, she can healthcare. Yeah, healthcare is not the good, but RTX Raytheon is a really good stock. Oh, they're gapping. What the fuck? What the hell? Let's see what year to do for 50%. So I don't know if I want to buy this, given that it's super like already extended, like even across the year. And even in April, they barely bottomed out to like the start of the year's returns and then shot the fuck up. I guess maybe on a correction, this would be the play, but I also want to still do more research. But it's looking like consumer defense or defensives. Oh yeah, because they're also likely to put way more money into it. That makes a lot. But yeah, those are kind of my main plays. But I'll clean it up and then put it into the Discord once I organize everything. But that's mostly my
It's perfect. It's
and
perfect.
small
It's
little
perfect.
recap. Let's go over the headlines. GDP's growth still staying the same. GDP numbers are all lies still. Again, they were able, or that's why we saw that major tank when it went to negative right after the tariffs hit. But then they readjusted it for imports. So great. Energy prices are going to continue to go up. Labor straight in the shit. They've continued to fire everybody. Monetary policy, again, the Fed is still scared. Literally, like you heard in the video, they're holding meetings with the best people in Wall Street off the book, come up with some kind of decision. But obviously, if you already know which options they really do have to go about everything. Consumer spending is still continuing to be in the shit. Then housing markets are still under pressure. Rates are still super high. It's kind of, I mean, I think they really do want to sell, but there's no point given that like rates are still so high, so we're looking for like but it's just it's the whole shit's fucked for anybody trying to buy a house anyway. So there's not gonna be a lot of people trying to buy. Or I just I didn't fuck it up. No, the prices are most likely to be going down continuously. Rates are still high. There aren't a lot of buyers and people are still looking to sell their homes, but it's just not likely given the Fed not being able to cut down. You can see the mortgages. There. And of course, why not more U.S. China trade war? Let's continue that.
I think actually that there was a message sent out this morning about trade resolutions or canceling trade or something coming out actually.
Yeah, because literally it's Trump now just rolling back. It was the funniest fucking head. I really hate politics so much too. Niggas will write that in the title like it was like Trump continues tariff. It was like food based tariffs rollbacks to help lower grocery prices. He made them high in the first place.
Yeah. Yeah.
What are we talking about?
He's actually been doing that since he's been elected, so I'm not even surprised.
Like, Like I'm not surprised. It's just like, are you guys fucking stupid? Oh my god, he's helping us out so much. He made he chopped them up and then cut them down for free media. So it doesn't make any sense.
Yeah, he creates the problem so that he can fix it. But
And manufacturing products to
that's
produce supply.
that is what it is with that.
Oh,
Hmm. Let me let's jump right into the strategy, just so we can have it done with, because of time. Let me see something though. I don't know why it's not. Is my screen showing as well?
yes.
Okay, perfect, perfect. Chico, you here too as well? This is a little bit more for you as well, but let me make sure the stream also is clean. All right, Chico, you here or no? Probably not. All right, I'll probably just get started.
That's tough stuff.
All right, so I'm gonna give you a more formal version of kind of the video I gave you, Jeff. Essentially, actually, first, no, let me give you my NQ strategy before I give you my gold strategy. You can trade gold how you probably like. Gold, my gold strategy is so simple, like it's almost disgusting. But we'll get back into that. Let's go into let's go into this. So the way I start off my, like, just starting off the day, just in general, pre-market analysis, I just have levels marked out. So we're gonna use Thursday as an example for Friday into Friday, right? So I have, what is this? Previous day high and previous day low. Essentially, that's what I like to call them. Let me turn off this magnum. Sorry. Previous day high, previous day low. That's what I call it, right? Right. This these are just like validly speaking, like I'm talking like historically speaking, these are just valid points of liquidity upon targeting it. Usually, each day one or the other is taken out, like consistently. Like it's very hard to find a daily candlestick that did not take out either the previous day high or the previous day low. Like, look at this. This took out both the high and the low. This took out the low. You see what I'm talking about, right? So previous day high, previous day low. They're perfect points of liquidity. I will say primarily for this strategy, liquidity is all that's important. So I go top down analysis. This is 9 a.m. I mark out the daily. I go on the daily chart, high and low. What is the daily chart overall bias right now? I'm seeing a bearish bias on the daily chart. That's just kind of what I'm seeing. So overall in the week, seeing this pullback, I'm thinking, okay, we're having a bearish week. I'm only looking for shorts. I don't think I'll be looking for longs until we tap into a key zone that might be important. So all I'm looking for is down. That's what the daily is looking at. I jump on the 4 hour, right? 4 hours very intricate. The reason why I like the 4 hours is because it also indicates a lot of areas, a lot of rooms in which, price may target into and react off of. I'm gonna give you an example. This right here is a gap. It's a fair value gap. It's a value gap right here on the 4 hour chart, right? This is important because these tend to be invalidated on smaller time frames, like the 5 minute, 15 minute. You will see that more. It's more noisy. On the bigger time frames, they hold up pretty well, like strongly well, right? So for an example, right? Let's say I'm coming in fucking on Friday, and I'm seeing this on Thursday. This was created on the 4 hour on Thursday. I'm drawing this out, right? Let's assume this is Friday, 2 a.m. candle, right? Whatever. This is what I see, right? I'm definitely gonna go into replays to show y'all on FX replay so I can try it as well. But this is another key level that's important to me, right? I'm also trying to, like, as I'm teaching the strategy, I'm also trying to, like, um kind of teach the key terms as well, because I know some of it is not just purely statistical terms, it's just like price action terms as well. So I trade gaps. Gaps are so, bro, I don't think literally a gap in a market is filled 100% of the time. That like 100% of the time there is a gap filled on the daily chart, on the hourly. When there's a new week opening gap or a new day opening, or if there's a price gap, it is filled 100% of the time. Whether or not it's filled in that same day or different or that week, that's when the percentages change to 90 or 80%. But that gap will be filled. For an example, new day, new week opening gap, immediately it was filled within that week. by Tuesday it was filled, right? And then all these different gaps, they're always filled. So I'm always looking for gaps. Now this also classifies as a gap. Why? Because this is where orders like price quickly just punched right through and didn't like pick up tiny orders. It like slippage, none of that shit. This is just pure price action reading. This is not, I'm not even looking at this with context of anything. This is assuming I'm just looking at this chart right here. I'm just looking at these candlesticks right here. So seeing that, I'm seeing, okay, this is a huge gap. We see liquidity kind of like price get resisted here. This is also where my support and resistance plays comes into as well. A lot of these levels apply as resistance levels as well. For an example, coming into this, right? Seeing this get created on Thursday, right? We're assuming this is Friday morning. Seeing this gap getting created on Thursday as a gap, it is also turned into a resistance level as well, where price, I'm looking at price. Price is having a hard time to tap back into the price or to go higher from this level. And my bias is bearish, right? This is coming in Thursday. Cool. Now my intraday bias is not determined by my 4 hour daily bias. My 4 hour and daily bias is my weekly bias. That's just for this week. What am I kind of looking at price doing? This is kind of like, I don't want to call it macro, but it's macro in the sense of intraday trading. Like it's just my bigger idea for the long term, right? So if I drop into the 1 hour, what is price action doing on the 1 hour and on Thursday, right? When I'm looking to the left of me, since this is Friday, price just plummeted. Price went straight down, right? To the point that it just kept going. There were no bullish candles in this entire section, right? So I'm like, all right, cool. We have price just moving very quickly, and then we have a new day here. Asia session opening above previous day low. We have a fair value gap on the 4 hour, and so I've got a lot of bearish ideas here. Now the problem with this, right? I think Jeff, we trade Thursday or Friday? I believe it was Thursday we
Yeah,
traded, right?
Thursday.
Yep.
Thursday.
Bearish momentum. It was very easy. It tapped right into the EMA as well on the 1 hour at around Asia. It just continued lower, right? So obviously this was such easy targets as well. Your algorithm picked up on it as well, and whatnot. Now this is where things get important, right? Not getting caught into a reversal. Essentially, what did I tell you guys? I told you guys that one of the most important parts about my strategy is to watch out for liquidity points. So liquidity points are just extremities. The extreme highs, the extreme lows, the swings on a higher time frame. I'm paying attention to that. As you can see, price swept last week's low. This was last week's low right here, right? This is the previous week low. So this is not. So this is assuming we're still trading last week. So this is the week before's low, essentially. Price swept that on Friday and just bounced up, right? Now my bias is bearish, right? My bias is bearish the whole week. Coming into Friday, I'm thinking, am I still going to be bearish on Friday now that we've come swept this liquidity point? No. Now I'm going to watch what is another point in which I can see price kind of bounce off of. This 4 hour fair value gap served as a resistance area in which price could not get back higher above, right? So now these are just points of interest. I like to call them, these are just points of interest, important points I want to go to. So 15-minute, 1 hour, looking bearish. Now my intraday scalping is between the 5 minute and the 1 minute, and sometimes the 3 minute. Essentially, what I like to look for is I develop a bias. Once I have my bias, I look for my liquidity points. Once I have my liquidity points or targets, I then look for gaps in the market. Once I find those gaps in the market, I look for price to either continue respecting the gap or inversing the gap. The strongest part of this strategy, the 80 to 90% win rate of the strategy, is when price inverses those gaps, when we get the 80 to 90%. The weaker side is obviously continuation. So, for an example, coming into Friday, right? You would think this is a continuation, right, from Thursday, just the sell off from Thursday, right? So coming into Friday, we're on the 5 minute chart, right? This is midnight open. Another point that's very important as well. Midnight open, up there, right? So I'm marking that. I'm marking that out as well. Midnight open is also important because price. I like from my back test, and I back tested up to June. I kid you not, I got it like an 85% back test of in which price has retraced back to midnight open without, what's the word? Without like fucking just leaving it and not doing anything about it. And this is with all the tariffs and whatnot. So coming into
Say it
Friday,
again.
midnight
Say it
open.
again. Okay.
So like price at 12 a.m. Like for some, I'm not even trolling. You can go through the left side of your charts. There is an eight since June, and this is my back test as well. You can also see this on YouTube as well. Since June, I've had an 80% chance of which, between 70 and 80% chance of which price has gone back to midnight open. You can even see it right here as well. It literally did
That's a
it.
universal stuff.
Literally, so you feel me? Exactly. So like, it kind
Universal
of
stuff.
I kind of paid attention to this a lot. Why? Because of the swing aspect. Like if I were to try to swing trade this instead of intraday trade this, where would I want my wider stops to be? Where would I want to place? And usually midnight open is a really good support and resistance area to be in. Aside from 9:30 a.m. open, midnight open is another one, and it's taught me a lot. So as you can see, price did retrace to that around 4 a.m. Right? So I already knew what I'm thinking after seeing that 4 a.m.
Mm.
retrace, right? If I'm trading London session, I'm looking for continuation. If I'm trading London session, right? We tapped into it, we rejected off of it. I'm gonna show you something. I'm gonna show you something right here. How I scalp. We're gonna get into 9:30 a.m. And Friday's a bad example because it's a reversal, but I like it anyways. We're gonna get into 9:30 here.
And mind you, I played that. I played that fucking. I was up like an extra 5, and then I left that shit. No, I was like, I know damn well this shit's gonna flip too. It'll
Yeah,
disrespect it, and then it's gonna trap. And I watched the volume do that shit too. It was so
it
funny.
literally it's disgusting. Friday was like honestly, it was classic textbook, but it was also disgusting. Like just in terms of trading it. But yeah, so there's so much to teach out, but I'll keep it simple. There's a stupid term which I
Just seeing how I feel.
there's a stupid term that is being used, but it makes sense. It's called turtle soup. It's very dumb. It's an ICT term
Oh,
essentially, right?
bro,
It's
yo,
it's
this shit has been in the game for
for
years.
yeah, it's been here
That shit's like at least
like
10 years old. I can't lie.
yeah. So looking at turtle soup, I kind of you see what I do here is I like to take a lot of information and then just keep it stored in my head just for references, right? Because unfortunately, right, ICT is ICT, but ICT works. Like that's just the way it is. Consistency, people have shown ICT to work. So turtle soup, go for an internal liquidity to go for external liquidity. That's just the primal idea of how turtle soup works, right? So here, if we're looking at the 5-minute chart, this is essentially pre-market. We're building up a range. We take out these equal lows on the 5-minute. These equal lows on the 5-minute also is what is known as internal what do you call it? External liquidity. So this is like in a smaller frame, right? You would think this is internal. This is an internal low, but because of the bigger picture, this is an external low. This is because that is the lowest point as of recent bias, right? So now that it's taken that, right? And this is why if I didn't hear the news about Trump saying, "Oh, he's solving the trading thing," I was coming into this week bearish. Like this week I was coming strongly bearish because Friday just served as a retrace, right? Let's take a look at the Fibonacci from Thursday, right? Friday perfectly in the 50% range, and I want to show you how all these key levels just align. The 50% range is literally the bottom of the gap on the 4-hour chart. The 50% range of this sell-off, this leg down, is literally the gap as well. Perfectly. And this is how levels start to align as well, right? You can see the gap here, 50% Fibonacci retracement, whatever, right? Seeing that, I'm just looking at this like, no, this is not a reversal. I see price using this to go lower. I just see price going lower. So going back to Friday now, I have these two. These are the two indicators I use: EMA and fair value reverse fair value gap, because I can't be like going back and forth trying to figure shit out. It's actually like pretty annoying, right? So looking here, as you can see on the on, let me jump to the 5 minutes so you guys can see 9:30 a.m. We swept the low, reversed upwards. Seeing this bullish, this is where I would have looked for opportunities, right? We see a 15-minute inverse fair value gap get created. What does that mean? If you jump on the 15-minute, right? We're gonna come here. There was a gap, and this is why I use the indicator because I probably would not have seen this visually. There was a gap made on the 15-minute right here, bearishly on the left side, meaning that if this were to be a continuation lower, price is supposed to respect it and go lower. Price inversed it. Inversions are high key indicators of reversals, right? So now if I'm looking at Friday, I've done my pre-market analysis. I know Thursday into Friday we swept the previous week low. What am I going to be looking for? Potential opportunities for reversal. I see that 15-minute inverse fair value gap. I jump on the 5-minute instantly. So this is like we're nearing 10 a.m. I see a retrace towards that inverse fair value gap, yet still a bullish close here. Right here. Now, the reason why I'm not taking this long here is because my stop, I cannot have a 75-point stop if I'm trading 1 minute. Like that's insane. I'm probably gonna like that's way above my risk, just in general, unless I'm trading micros, right? So
I
instead,
know I started doing like 1.89 for slippage.
the thing is, right? I don't know, but I can't. Oh, 1.89 as in micro or mini on the mini.
No, the 1 to 2. Yeah, no, like my contracts are still the I didn't know if I told you that, but my strategy for A setups is 10 contracts for eval, 5 contracts for funded,
Mm-hmm.
and then B setups is 5 contracts eval, 3 funded. But
Yep.
I was talking about RR. So I
Okay.
set my profits conservatively to a target that I know will blow through,
Mm-hmm.
and then I just set my stops to the 1.889.
Okay. So you just go for base hits. Yeah, I like that. I
Yeah.
like that. I'm just hard stuck too. So like you said, so for my funded, I risk, and that was something I wrote down. I forgot to talk about my risk management. But essentially for my funded, I run 7 micros. The only reason I run heavy on my fund 7 micros heavy is because what I've noticed is that when I'm trading the eval and I jump into the funded and I start trading the funded
Mm.
way more delicately or conservatively, I fuck up. Like my
Uh,
psych just like becomes
yeah,
too passive, and then I'm not taking things
yeah.
I'm supposed to be taking. So then on fund day, I kept that 7, and then my eval 10, and then when it's a B setup, I drop my. I don't even take the trade on my funded sometimes if it's a B setup. I just take it
Yeah.
on the eval and then just. But yeah, it's obviously up to preference. But let me jump back into this. Now I've kind of touched out terms. I've touch out like like the gaps. It's liquidity. Liquidity is just what I'm looking for. Extremities, highs and lows. When I get into the charts, I'm looking at what highs and lows are important, or what are important, and what can I see? What swing highs and lows can I see, and what gaps do I see in the market? So let's find an opportunity. So now I'm gonna find an opportunity if I wanted to take a trade, right? Here's what I'm gonna do. We're gonna go into FX replay. I don't know if you've used this, but this shit it's a pretty
That's,
decent tool
uh,
as well. I was actually I was back testing this as well. I think I deleted my drawings. I hope I don't. If I didn't delete drawing, I would be able to show you guys the trade I took. But yeah, I probably didn't. Okay, so cool. We're gonna jump into this live, and now this is without my indicator. This is just me now, right? Okay, 2 p.m., 9 p.m. Okay, 2 a.m., 3 a.m., 4 a.m., 6 a.m., 7 a.m., 8 a.m. Okay, cool. This is the 1 hour chart, right? Let's jump on the 4 hour. 4 hour bearish, right? And when I say when I'm looking for my bias intraday, I'm not looking at the bigger picture. Bigger picture, this is still bullish. You know what I mean? But I'm looking for what am I trading that day? This is bearish, obviously, as you can see. It's just bearish candles, right? Let's jump into the 1 hour. 1 hour bearish. Now, simple. I'll mark out my extremities. What is this? London law. Important. And I kid you not, this is how my mind is in the morning, every morning. I'm just going through shit. Okay, London low, Asia high. Asia high is currently the highest point that has not been touched. Right? Cool. Asia high is right here. Sorry, Asia high is right here. Boom. 6 p.m. Asia high. Great, cool. London high right here, which is also pre-market high. Now, do you know? Now that I've gotten my liquidity, right? What am I also looking for? I'm looking for fucking gaps, right? On the 1 hour, we've got this bearish gap here, which I anticipate being broken because it's been tapped to multiple times. Cool. Not worried about that. If I'm looking for a trade here, what I'm looking for is that I want price to let me get a path so it's obvious what I want to see. Do I want price is to punch through? That's how I want to see price. I want to see price take out Asia high. If we are truly bearish, I want to see price. This is an A plus setup. I want to see price take out Asia high, come down to London high, inverse this gap because currently, right, the way I see it is that this is a bearish gap that might turn bullish. I see price potentially going through and turning this gap into bullish, which inverses it bullishly now. I want to see price then flip back, use this as a resistance again to go lower. But we're just gonna continue. Now I'll show you where the 1 minute comes into play. So now this is 9 a.m. We reject off a London high, 9:30 a.m. open, right? 9:30 a.m. open. What am I looking for? I'm looking for price. Price needs to take some sort of liquidity. If this is truly, this is assuming there's no news. This is November 5th. Yeah, so I don't know if there's any news, nothing like that, right? Chopping, cool. Have we taken out any points of liquidity? No, we've only taken out internal liquidity right here. Turtle soup. Just the same way I see shit. Turtle soup. Now I've seen us take out internal liquidity, but I'm still bearish. I want to see price go lower, but it hasn't given me any confirmation that we're going lower. Now we've respected the EMA. We've gone under this internal low again. Let's say I want to take a stab short now. Let's assume I want to take a stab short. If the 1 minute comes under the EMA, I'll take a stab short, for an example. Let's assume this is a short. I have my stop. Okay. The stop has to be a little bit wider because it's not actually NASDAQ. But let's just assume my stop's like this, right? Let's just assume for now. And I'm targeting, let's say I'm targeting this liquidity. This liquidity right here. Right? Let's just assume that's the trade I want to take, right? So 7 contracts. This is not actually, unfortunately, NASDAQ, but it's close enough. Yeah, so like if I was actually like I would actually risk 500 or something. Let's just assume. Let's just take a stab and see where if price would actually go to where we want it to go.
I'm down.
Just like that. Right? And now, what was my bias? Bearish. What did I say I want? And it's obviously simple. I come into the charts. I say to my head, what do I want to see? And if I don't see that, what can also work? What I wanted to see was a perfect day would be I would want price to sweep London high and sweep Asia high and then come back and resist this as well. But it's okay if it doesn't do that. Why? Because I seen price, market opened here. What did market do? It swept out an internal low. This is the turtle soup shit I was talking about. It had a little choppy range. It took out a low, came up, did not want to go any higher, resisting another gap. This also is a gap. This is a rejection block. This is what is known as a rejection block. This is why I was saying like I've gotten better at just pure price action, just looking at the chart. This is just looking at it. This is a rejection block. This is an area in which price cannot sit in currently due to its trend, just trend alone, right? Rejection block, it tapped into it, rejected it. Market now is rejecting it. I definitely could have entered way earlier, but what did I want to see? I want us to come back under this internal low and turn this now into a resistance instead of a support level. Because I can see we swept it and bounced up. Turn that and waited on the 1 minute to see price reject off the EMA, go short. Target my liquidity point. Boom. However, price looks like it's targeting this. Price might hit this. Boom, and it's just plummeting. And look at that. It took out that liquidity point and just continued chopping back up. This is what I'm saying. Price targets. It targets just specific parts. And now price has made an equal low. Like I'm not even joking. If I was looking for another trade, this could be a possibly another trade. Let's just see. Let's see if it works. Let's say this is my stop loss and this is my TP. Just out of curiosity, I want to see if price would go to that level. Just out of curiosity. Just chop it. Okay, so price didn't go to that level. Now that I've seen these equal lows, Jeff, this has now become a support level. And it just doesn't even drag. It doesn't even have to be overcomplicated like this. And now if I lose a trade because I'm on the wrong side, whatever, doesn't matter. But what do I know? This was the right trade. This was the trade I took in the morning at 10:30. Mind you, my strategy as of recently, I have been getting off the charts by before even 10, right? Like I said, there was an opportunity that I could have taken right here in this rejection. This would have been my trade if this was current day me. I just provided y'all A plus setup. But this current day me, this is my trade up here. Let me delete this so you can properly see it. After that 5 minute rejection, we swept it. After that 5 minute rejection, I'm trading continuation all the way down to this level. Where's my stop? Above this candle. 20-point stop. Target that. 2-to-1 risk to reward. Very simple like that. That's why I was saying, like, my strategy is just not complicated. It's mark out key levels, mark out what you want to see on the chart, and once you see price respecting specific levels, wait for the bounce. And now, obviously, we all trade with different confluences. You use something else as well, like the volume profile. You have a more advanced version of that as well. What works for me may not work for you. What works for you may not work for me, right? Whatever you see, whatever is easy for you to understand is what you use. The EMAs have been so easy for me for entries. Like, once I've been using the EMAs to enter off on the 1 minute, my trading has like been completely different as well. So step by step, right? If I'm providing just purely steps, determine bias. Where's my bias? My bias is going to be on the 1 hour and 15 minute intraday. This is my intraday bias. Obviously, every Sunday night before you start off the week, you should be doing your weekly bias as well. You know, looking at how price worked the last week, what gaps are we looking to fill, all of that shit, obviously. But intraday bias should be on your 1 hour and 15 minute. It just keeps things simple. What's next? Mark out key levels of liquidity. Extremities. That's just literally what I call them. Extremities. Definitely spelled that wrong. It's okay. Highs, lows. What is the highest point in this session? What's the lowest point in this session? When it happened, da da da. Mark that shit out. If price hasn't taken it out, that's where I'm watching. That's where my eye is going to be at. If price has taken it out, that's going to be used as support or resistance. Cool. Whatever. After I mark out key levels of liquidity, watch order flow. How is price moving? This is why, like, marrying your bias is like so shitty, right? Like, yeah, I have a bearish bias, but if I'm looking at the order flow and I see it's bullish, why the fuck would I be looking for shorts? It's either I don't take a trade or I flip my bias. You know what I mean? And this was also around the time, and the reason why I added order flow to my strategy was because I was using Bookmap as well. I use Bookmap a lot. Like, I actually started understanding how to use it. Unfortunately, I stopped using it because I just realized I'm just providing myself too much noise. I'm not there yet. I'm gonna come back and implement it. But order flow, you've mentioned this before yourself as well, Jeff. Order flow is important as shit. So why not use order flow? Watch order flow. If order flow is giving us bearish flow, why are you bullish? You're not supposed to be on the bullish side, but you already know that. Cool. Watch order flow. What's next? 5 minute, drop to 5 minute, and look for inversed or continued / respected gaps. Meaning, if you see a fair value gap that has been inversed, that's a key point for you. Your entry is getting set up. If you see a fair value gap that has been respected and prices wants to continue in the same direction, that is a key point for you to get ready to enter. Lastly, 1 minute, wait for EMA retracement. It's that simple. And respect. If the EMA if it traces to the EMA and then respects it, your trade is basically an A plus. basically an A plus on the 1 minute as well. If you see price, sometimes price on the 1 minute goes through it and then comes back and then fails to come above it. Let's say you're going for a bearish bias, still an EMA retracement. You waited for the EMA retracement. Now you've realized that the market has picked up all the orders it wanted to pick up and ready to continue. And this is just based on, this works continuation, this works reversal as well. The only, and I've done a lot of back testing, the only fall to this strategy is if we are in a ranging market. If you are in a ranging market, you have to bring your scope even smaller. Like you have to zoom in even more. And I'm sure you know this obviously, right? In a ranging market, your liquidity points will not only have to be your session highs and session lows, it would also have to be the turtle soup. And that's why I brought that up. It also have to be the turtle soup session high, turtle soup highs and lows. And the reason why I said turtle soup is because those highs and lows in the turtle soup, to me, from what I have seen in the time that I have been in the market, have turned to either support or resistance levels, or just important levels in which price can just come back to and do what it has to do. That's just the way it's been. It's a 5-step strategy. I risk 500. It's one trade a day. I go to break even once I'm at 1-to-1 RR, so I don't even have to like trip as well. Going break even 1-to-1 RR, Jeff. Oh my God, that that shit is that gets your mental set. When you hit 1 RR on your paint or whatever, like once you hit 1 RR, bro, and you're going for 2, bro, once you put the shit to your order to break even, and you like now you know you're risky, like you're not even like it's risk free, like
I think the psychology
it's
saves
just
after
yeah,
that.
it's just yeah, you're saving yourself from unnecessary stress. And every time, and I kid you not, since I've been trading this strategy, there's never like seldom been times where I've been live trading and it's gone past 1-1 RR and it didn't hit my TP of 2-1 RR. That's why I just go for 2-to-1.
Simple.
A lot of people say with this strategy, right, different implementations, I can definitely go for 3-to-1. Like if I leave a runner and trail as well. But I hate trailing because I generally don't know how to properly trail. I don't know how to properly trail my profits. I
Mm.
like having a rigid, solid, yada 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 about it as well. So let me give y'all one more example. Then I'll let you go. That's like my strategy essentially. So I'm gonna see if I can find another good example. Let's go here. 4 p.m., 9 p.m., 10 p.m., 11, 3 a.m., 4 a.m., 5 a.m., 6 a.m., 7 a.m., 8 a.m. Cool, great. What am I looking at? What do we have here? Asia high. So easy, so efficient. Stacked highs as well. Asia high with stacked highs is actually like the most beautiful thing you could ever ask for. What do we have here? London low. We're even building our own turtle soup on the 1 hour. Even better. Couldn't even be mad at that. Great. What is my bias? Right now, my bias is cautiously bearish. Why? Order flow is bearish, but we have developed a range in which, depending on whatever side we break out to, that could be the side that we just continue. So meaning it's possible that we can just break out higher, break this ceiling and just continue higher, or we break this low and continue lower. Cautiously bearish. Jump into the 5 minute. What am I looking for? Market open. This is 9:30 a.m. Market open. Yeah. I'm surprised. Volatility has been. Oh yeah, because the government shut down. It's kind of weird to look at this in a bigger scope, in the grand scheme of things. Like, boom, turtle soup on the 5 minute. We took out a ceiling. Now I'm looking at this, right? It fulfilled 2 checkpoints. It rejected off the 5 minute EMA and it swept the high, meaning I should be looking for shorts, right? The only way I am looking for shorts is if price inverses this gap. If price doesn't inverse this gap, I'm not looking for shorts. I'm still looking for long. Imagine I entered a short there, stopped out immediately, bro. Now we made another gap. Honestly, right here, stacked highs. Respected this gap. I'm not gonna lie. I would take a stab long right here. What is this? A 1 minute respect of the EMA? Respected a 5 minute gap here. Where's my stop gonna be? Right under the low. Where's my target gonna be? This I'm gonna target a 2 to 1, right? But what I'm also gonna do, targeting the 2 to 1, is that once we take out this level, I'm gonna go break even. Why? Because I want to make sure like this is not I'm not getting reversed on. So let's say I take a stab long here. This is my stop. This is my stop here. This is my TP. Cool. Respected the gap again. Chop, chop. Inverse the gap. I'm closing right here. Why? Gap inversed. And the funny thing is, I didn't even have to close. Oh my god, I didn't even have to close. It wasn't gonna hit my stop. It didn't hit my stop. I would have went break even, and then I would have been stopped out. Look at the choppiness. You see how it didn't hit my stop? Now assuming, right, I'm a strong psych trader and I don't move to break even, it hit TP. That's a TP trade. But I like protecting. I like going break even after 1 RR, or if I see a specific point, I like to go break even 1 RR. This shitty price action. This is also lunchtime as well. So this already like my win rate goes down by lunch. But yeah, so simple, so efficient. So that's the strategy, right? Let me just move on to scaling, and then we can be done with that. Honestly, talk about scaling and kind of my plan right now, right? So let me show you guys where I'm at, right? So as of right now, I don't have a so there's no my funded futures. It's just alpha. I have one alpha funded account, right? Let me make sure this is not on gold when I'm trading because I'll be very tight if I fuck this up. Like I'll be very tight. But as you can see, I'm not lying. 7 contracts as you can see. But okay, so currently this is my total P&L on the funded. The funded is up $500, right? Um, the win percentage is a little bit off because for some of the losing trades, I scaled out of it, so it looked like I was taking more trades than I actually was. So like I have a win rate of like 60% or so. But I had a really bad day here, but as you can see, recovery. Slowly, slowly recover. I took a loss, boom, recovered, didn't trade on Monday. Tuesday, Wednesday, Thursday, took a loss, and now we're gonna start off our week again. This is just progressive growth, right? That's all I'm saying. Like definitely seeing a payout by Friday or even, next Friday as well. Just progressively growing. Because of my consistency rule, I have to hit I think about to get the payout, I think I have to hit like 1,500 or $2,000 for the payout in order to get that as well. So in terms of scaling up, my goal is get a payout from this account. This is my Alpha Zero account. I get my payout. Once I get my payout from this account, I'm then going to go hold that I'm not gonna invest into another eval. I'll invest into one eval. That's it. I'm just gonna put it back into one eval, right? But I'm not gonna prioritize it. My priority is gonna try to keep this account alive as much as possible for at least a second payout cycle, right? I'm gonna get another eval. I'm gonna pass that eval, and I'm gonna trade these both and try to get another payout. Once I've gotten another payout on this account, then my scaling system is gonna start. In which each payout I'm going to use 60% invest back into the trading system, 40% personal. 60% of that is going to go into straight um zero accounts. So I'm going to get max allocation on zero accounts purely because I can pass quickly and then try to get the payout really quickly. After I've done 2 to 3 cycles of the zero fucking payout cycle of the system, the zero system, once I've gotten 2 to 3 payout cycles, I'm going to then move on to the advanced account because the advanced accounts are actually atrociously disgusting. Like, um, I mean, sorry. Oh, wait, no. My apologies. Right. The advanced plans, right? That I don't know. They did something with these, but essentially it's because of their payout cap, right? I'm gonna invest in my first advanced plan account, and this is assuming after like three payout cycles for the zero account, right? I'm gonna go get an advanced plan account and start trading that slowly, cause it is It's mental. There's a $15,000 payout cap along with the zero system still working. But unfortunately, I believe I have to blow some accounts in order for me to get the advanced plan because I'm gonna have max allocation. It's gonna be way too much. So
Mhm.
and then from there on, it's advanced, advanced, advanced. You just keep recycling right now. So right now, I'm actually like this is the best point I've ever been at in a funded right now. Every time I've gotten funded, bro, I've always been immediately in drawdown, and then the account is blown. So shockingly enough,
Uh,
if you've seen where this account was here, as you can tell, this account was one trade from blowing. Meaning, if I took the next trade on Wednesday and lost, I would not have a funded. I would not have had a funded. Won that,
mm,
scalped Thursday, lost Friday, didn't tilt, came back on Tuesday, Wednesday, Thursday, clutched up with bangers, and then Friday losing day fine. But I still had a net positive. My goal is to have, if I'm gonna have losing weeks, my goals are at least the losing weeks should be no more than 1,000. So this kind of like, it's kind of unfortunate, but this was just great. If I had not lost on Friday, and the only reason I lost on Friday was because I traded gold, which is
mm,
sickening. Like I said, I'm not good at gold. I just have a simple strategy, um, and whatnot. But yeah, so that I definitely think for your scaling plan as well, same thing. Like you need to what's the word? How do I say this? Like I would say maybe the first payout, don't flip. I would say prove consistency to yourself and then flip the next payout, if that makes sense. I don't know if you understand what I'm saying. Like that first payout, when you get on the account using your strategy, using your volume profile, take that and keep that maybe for options or another investment, and then for your options play, and then after that, once you've seen that you've proven yourself, then I think you know what I mean. You get what I'm trying to say. So definitely do that. I think just recap wise, I wish Chico was here so we can talk about because I know he's saying he's gonna start Thanksgiving break. You have the account now, Jeff, right? What are you?
yeah. Oh, I can show you mine. Yeah, I'm zero. I'm up 1,300. I'll do mine once you're wrapped up, so I can go over my strat.
Yeah.
Oh,
Yeah. So yeah. I mean that's yeah. My performance is pretty good, honestly. I have solid performance. I've proven like my strategy has proven to me like I'm not a bad trader. It's just my psych. So having that down, and as you can see, I've been doing this with delayed trading view. So yeah, I've been hard work here. When I had Trader View, I was working hard at Trader View. I think learning just how to read price action raw also like increased like my ability a bit. Trading view is a bit, trading view sometimes coddles. Let's be honest. With all the indicators, all the shit, like sometimes information is just easily accessible. So I think it was good for me to get that reset to actually read market. I told myself
mm,
I'm not gonna get the premium version until I get my first payout. When I get my first payout, I'll pay for the premium version. I've proven to myself I can do it. So yeah, I mean that's pretty much it for me, honestly, in
okay.
terms of that.
Let's go on my account and then I'll do a very quick run through on if I can see.
Yeah, we can see.
Uh, There we are. So yeah, this is what I was saying on Friday. And it was a little bit of bullshit. I really could have just held that extra bread
Yeah,
and
yeah,
that
yeah.
cleaned that out. Like a double roll back to back trade, but it's all good. And of course, like I said, I couldn't close, but they clutched up on
Yeah, and they fixed. I told you there was. I told you there was gonna fix
yeah,
that
they
shit.
had me. So first trade, that was Thursday, little $1,300 trade. The account's currently at
Fire,
1225.
fire.
Trying to hit that three for the pass. But this is one trade.
Honest.
Or
This
one
is what I
actual
love
like
to see.
trade.
That's what I'm saying. This is what I love to see, bro. I need you funded so that like our psych is on the same level, bro. Because I feel
Oh,
like
gee.
eval psych and funded psych are just two different psych levels. Like eval, like to be on, like be
Really.
honest, on eval you kind of don't get as mad when you throw up some bullshit. Like then on
Low
funded,
key.
bro. Like that's what I'm saying. Funded psych, we're gonna like. The analytics are gonna be
Because it
disgusting.
stresses you out even more, but it's honestly like you just need to take the only A setups. It's like I would have to be mad at myself if I didn't take the trade rather than
Yes,
say,
yes.
you
Then
know.
then then
I
get
feel like
mad
the
that you
issue
took the
being
trade.
is you see,
Yeah, for sure,
but
for
the
sure.
point being is like it just means sticking to the system is really the necessity, and it's like if you can't work with it, it just it gets you.
Yeah, nah, for sure.
And I'm looking at some Quayfin shit too. I want to show you guys this. This is like basically the free Bloomberg terminal. Honestly, it's amazing. I'm trying to read into my decision between the consumer defensive stocks that I wanted to pick up, but let's stick to strategy stuff right now. Come back to this.
Oh, that's right. Sorry, my first payout will be going to options. Let me know when, or a portion of it. Like I said, that's why I need you
I
to
mean,
just.
yeah, just
That's why
no,
I need you to
literally.
just throw your calls in, and I'm just when I have passive income, something that I can, because I balance
Yep,
whatnot.
yep. Yeah, that's what I was gonna say. Is like on any honestly anything you can pick up on like it's about to shit itself now.
Mm-hmm.
Anytime you can pick up some IBIT puts, like you're good. Can't even show that shit. It's literally like like
Yeah, look
it's
at that.
honestly a
Oh
joke.
nah,
The joke of a setup.
nah, that volume profile is actually, oof.
And
It's
oh,
actually
that's why I
like,
was like, I
it's
had to.
accurate as
Oh, bro,
shit.
this whole set system is like busted.
All right, talk to me, talk to me.
So
What is it?
Chigo,
NQ?
thank you, Chigo. I'm
Oh,
not sure if you're here, but essentially the strat is kind of copy and paste of the statistical, like any stats or any kind of like repeated patterns you heard in Sam's strategy. Kind of take them over and then apply them massively. So here it does look like a lot, but I'll kind of step through everything one by one and give the reasoning as to why I have everything. So starting off with this Markov model, it's kind of a very simple momentum based indicator. It doesn't really do too much besides just oh, there it goes. Your mic break again.
is,
Can't even hear the guy.
oh, you got to rejoin if your mic broken.
Uh,
Y'all can hear me?
there we go. There
I
we
can't
go.
hear
There we
you.
go.
Oh,
Oh,
it's not yeah, no,
I can't even see the word. There's a bad word I wanted to say. I can't even say it, bro. Oh,
You're trying to get canceled,
yeah,
bro.
I can't get canceled on stream, bro.
Um, so it's essentially like a volume bar sort of oscillator. We can actually read into each one too, which would be nice. But it's essentially, and of course, we're gonna learn way more about Markov models once you get to lit alg. But all you really need to know is that prices, and if you look at or if you want to think about stocks and trading kind of electronically and data science wise, they are time series data, or the data of prices is time series, and you conduct time series analysis whenever you're kind of working on mathematical or stochastic models or anything really in finance most of the time, right? So it's essentially Markov models or transition matrices applied to steady state vectors of the market and essentially the times or the prices in a time series data model. And all the model is showing me is essentially this histogram of if we're more likely projected to go into downturn or like negative trend, or if we're going to move into a positive trend essentially. And it just gives those indicators. And so this is one that I found that was extremely. I literally searched up Markov. I favorited every single one, and then I ran my back test through each one and checked the ones that I actually found had any accurate. It was mainly kind of like a if else statement. I was literally just checking to see if it was even accurate and was cutting a bunch of the other ones. So that's when you guys saw me send like that weird one with all the bubbles and shit. Or I mean, like the three
Yeah,
big
yeah,
ones in the chat.
yeah.
It was the fun shit. That's when I just started testing everything. And so then I also stumbled across this one, which is also super accurate and trend or momentum based. So you can kind of see it move much more cleanly and kind of give you an indication of okay, we're in an uptrend, but we're transitioning out of. So it kind of gives you a cleaner understanding of what state we're in convergence and divergence essentially. And
Mm.
it's forward looking. The reason why, or like I had said, like in the start of the summer, you're gonna learn a lot of shit, but you're gonna realize really quickly none of it means anything
Yeah.
because majority of indicators or majority of strategies are if not overfit because like the market permutates.
Yeah,
All
they
that
look
really
back.
means is that obviously over time behavior is going to continue to change. And so anything that you think that like worked in one time period
May not
is
work
going to
again.
not work over time, right? The forward looking indicators, which is why they're so not really talked about ever because obviously you're gonna have the quants talking about volatility and pricing and all these crazy ass models and
Mm,
Markov chains, but you can have everybody that's like in the space just to sell their courses saying a bunch of bullshit about random shit. You know what I mean? All that's
mm,
kind of lagging. And so my point of having both of them in the system is that they're confluences to each other, because then if one's being a little bit more inaccurate than the other, or one's showing that we're going to get a change in how things are moving earlier, I can kind of see that visually.
mm.
And the point being is that now, obviously, if two mathematical forward leaning models that literally are like using, or in the way they calculate is they have a look back period attached to the charts, and they look back in specific amounts of data. And so, why the fuck would I disagree with two of them?
Yeah, yeah,
Like,
they're
you know what I
both
mean?
that
That just
that that
sounds
makes
like
it like
a,
eight plus, eight plus.
you know what I mean? Simple as that. And then the rest of it just continues to overkill. So I'll talk about Lux Algo's volume profile. I really love it because it's the most clean one I found that like auto adjusts, and also like you can see these aggregates much stronger.
Alright.
And I want to watch way more videos about volume profiles so we can get even better with reading them and like adding them to the swing trading strategy.
Mm-hmm.
But essentially, there's certain structures that you can tell will be negative or positive or not, and like further combine your bias. But to add the more empirical reasoning behind a lot of Sam's work and kind of what ICT is derived from, but like it's really more hallucination than
Yeah,
statistics.
statistic, yeah.
If I'm being real, you know what I mean? Like their intuition's correct, but it's not for the right
It's not,
reasons.
yeah.
So essentially, prices and liquidity, there are certain levels that become sticky. Essentially, the same thing you'll learn it in economics and anywhere with kind of how prices are sticking and elasticity of demand, all those kinds of things. And so visually, obviously, these route themselves into how prices kind of stay around these given areas. But that tells us obviously the most amount of volume is being contracted around these price levels, and that's where we should be making our decisions, because obviously we blow through these spaces. Because why the fuck would I care about, like, say I made a line here, I made a line here, I made a line here, I
Yeah,
made a
why would
line,
you
like
care about
nobody
that
cares about
shit? Yeah,
it.
exactly.
You know, why are you wasting your time looking into those spaces
Extremities.
when you can just have exactly those
Yeah.
spaces that run straight through? And so that's kind of the essential placing for volume profile. For then again, it's like not only do I have these both giving me conviction for my bias, why the hell would I make my entry so much in a random ass spot when I can either
Wait
get
for the
killed
kilo.
or,
Yeah.
you know what I mean? Just, what's the point?
Okay.
So then adding in the sessions, which is why, again, I love the statistics of I was just like, why the fuck am I not using math all the time? This shit
Mm-hmm.
started getting me mad earlier in the week, where obviously at 9:30 or all the Asian and London sessions are going to have only so much restricted volume given the fact that they're not US hours. But once you see a massive expansion, and the market runs, or electronic markets, actually not even electronic, all markets run on auction market theory. That's definitely a big one for you guys to also look into.
Mm-hmm.
But essentially, when I talk about like buyers being trapped in, or I'll get into a bunch of volume analysis, but essentially the market moves from states between being balanced and imbalanced, and depending on who's in charge, essentially where you need bears or
Yeah.
bulls, or sellers are more in charge of the volume, or buyers are more in charge of the volume, that
Mm-hmm.
is able to understand what type of imbalance you're in. And so obviously, if I'm reading that all, or going over our Thursday trade, you can literally run this replay right now. Going over our
It was
Thursday
so
trade,
clean, bro. The show was
like
so
10,
clean.
10 out of 10. I literally, and you can't make
Like,
that same zone call. Like, we're all
it's so
there. I said,
it's
yo,
the fact that
shorts, clean.
all of our confluences are like, because I didn't even look at your strat. I was looking at my strat, and we both said, "Yo, we're
Mhm.
entering short right here." Like, come on,
Mhm.
nah, it
Clean,
was too clean.
clean cut, simple as that. You know what I mean? And so, where obviously you're gonna, and once you guys read into auction market theory, a lot of this stuff will make more sense. But all you really need to know, and it's like again clear as day, that we obviously have a negative imbalance across these sessions, and we've
Hmm.
seen the market sell into it. The volume's already been shitting itself, and we're looking to go lower.
Right.
Every single one of my confluences is showing a negativity, and we're just going to get that massive expansion upwards once we get that timeline. So that's why it's fun to have kind of understandings of the previous sessions and seeing where prices are at and what things are looking like
Hmm.
after leaving those areas. I'm kind of like seeing if there's enough liquidity from those timelines to then move markets in those other time periods.
Direction,
If that
yeah.
makes sense, you know. And
Yeah.
so literally now to run through
Break a
the
structure.
methodology of it.
Literally broke
Yeah,
structure right there. That's just textbook, bro.
like
I'm
you
sorry.
textbook.
Sometimes when I see like price action moving like properly, bro, I love it, bro.
Yeah. And so this was the gap fill trade essentially. Also, again, that's also another. I like statistical anomalies, or like we were saying, any gap trades. There's like certain specific little exploitative strategies that you can always have,
Like it's
and there
so
is a lot of
if I was
acting
a
outside of
dickhead, I would just trade
gaps.
gaps. If I was a dickhead, I would literally just wait till I see enough volume in the direction of a gap, have a large ass stop, like a swing trade, and
Yeah,
just
I
play
mean,
new week opening gap every week.
you would have been blessed. You would have had
Like
two weekly trades.
like New week opening gap is
This
just
nigga would have
is
nigga would have
mental.
full ported
It's
every Sunday.
literally no, literally right. I would wait
You might
for
as well. It's
like
good stats. That's three.
I swing like it goes for the gap
Yeah,
every time.
yeah. More
And
times than not.
recently it's been going for it in the same week. As of recently, it's been going
Mhm.
for it in the
Yeah,
same in the first 2 days.
all because of heightened volatility. And
Like
again, once you start learning all the correlations and seeing the math behind a lot of it, it becomes so simple. It's so fun. And that's why I was like, yo, I feel like I'm cheating in the middle of the week. I was just like, yo, what the hell?
mm,
So, right, come to the 1 hour. The methodology of it is A setups are the 1 hour, 15-minute, and 3 minute are all in the same trend. So the Markov models are all reading the same things. I of course I'm gonna look at what structure we're facing, and obviously we're seeing continued lower highs, just kind of regular price action and a massive volume profile at this area, and we're breaking below these support levels because again it's respected it bounce again, but if we're finally breaking through and it's 9:30 when again this is when volume is the lowest or it's like starting to ramp into the day,
mm-hmm,
right? So New York is just opening. So obviously we're going to see this expansion lower if we're continuing to break here and hold and close outside of that range.
mm-hmm.
And boom. So now we can see 1 hour says 55% of the downtrend plus negative on the histogram falling from this volume profile. Oh, and save the best for last, the bubbles. So cumulative volume bubbles also allow you to understand where people are positioned. And so whenever I see trapped sellers, for example, like this is the exact place. Hey, they think price is going to continue going on, so they short the fucking bottom, not knowing that prices respected this area earlier
Yeah,
times.
and
And so
just
if you want to see it
trap
as a
them.
buy, that's free money.
Yeah,
That's free money every time.
literally that's
You know,
literally a support area. It's like what the fuck?
or same
Like
you see what I mean? Or same thing here. For example, there's buyers at this level. Oh yeah, we're supporting resistance. We're gonna come
get
back up.
trapped.
It never came back. It did not come back and hold here.
Yeah.
And we're sitting right at the volume profile where it's heavy.
Look at that. So that means
Downtrend at
we're
40.
gonna get an immense reaction to either way.
Simple as that. Again, we have buyers trapped in at the top. Both Markov models telling us that it's negative. We
Oh my
have the
god.
volume again. This is the exact price area we want to be taking entries in,
Yeah.
within that like little 25% ish little area. So it's
Mhm.
safe enough before the rest of it. You know, like one, yeah, literally that little like 25% range.
Mhm.
So the move hasn't fully left us, even though it started before the session starts. 1 hour convictions there, 15-minute convictions there, plus negative bubbles. So we're already seeing that sellers took control here, and we've just dropped straight through it. It tried to come back again, rejected off that area, and we're clearly falling from that zone. Still, both of those confluences run through. And again, 3 minute shows that it's run through. We have buyers trapped in at the top with continued selling pressure at the bottom.
Yep.
Again, textbook trade. You
Yep.
literally cannot fuck this up. And so Thursday, where I only put in like 2-3 contracts, and then I over leveraged a little bit later into it. That's how they like fix my account afterwards because I couldn't close. But
Mhm.
I'm straight in the profit. One
Like
of those
it's insane, bro.
jump in, disrespect that area, and fall. Up a
Like
little bit, come back up.
retracement. I would have scaled in right there. Right there. That's
Yep,
where I would have scaled in.
that's your perfect place.
On that
Perfect.
rejection, I would have scaled in.
Or another perfect spot is right at break even.
Yeah.
They cleared
Yeah,
it,
break even.
respected it perfectly, and flew.
Literally. Nah, that's mental. Hold up, scroll up. Let me see something. It's something
That's it.
I think it's something I seen. Scroll up a little bit. Let me boom, let me show you something. You see that wick? Okay. I want you see where you first entered.
Yeah.
So you see where you entered your trade. Okay, so 3 trades off of, yeah, the next before that, the one before that. If you draw a box just representing the wick, that's a rejection block. That was my strategy last year. No, no, no. You see the literal the wick of the third candle from your entry. Draw the box right on. No, right on. Start the box from there. Start the box from there, and then put it across the trade.
Oh, like
Put it like
here?
that. Yep. Now put it. Now put the box on the wick. The next one. So the next two. So move it over.
Oh, you mean started from? Oh, my fault. My fault.
No, 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 no. You see where you
I'm
entered.
bugging.
You see the candle. You see the candle you
Yeah,
entered, right?
yeah,
Now move two
yeah.
over
Left or right?
to the right. That one. You see that wick.
Yeah.
Mark out the make the wick the box. That's what I was saying. Make the wick of that candle the box. Start the bottom
Oh,
from the bottom of that wick. That is a rejection block. You can see price perfectly taps into it and then respects and then comes back down. That's what I was. That was my old strategy, bro. I would get an A plus strategy
Oh,
maybe
okay. So, yeah,
like
okay.
like if I was swing trade like this was my string. This was my swing strategy essentially, but on the higher time frame. Look for a rejection area. Wait for price to tap back. Respect it and then target it, bro. That's why I'm like, it's
Yeah.
so funny that your strat is even showing that.
You know, and it's literally so that's why again I love boiling it back to just statistics and math. It's like once you're able to, or once you think of the market as a formula and you're just solving it by collecting essentially information on your parameters. Again, you could think about it honestly like solving a derivative problem. You know what I mean? Or like
Hmm.
you're solving for it's literally like once you get all of those themes and everything put together. Plus macros were perfect for this. Again, government reopens, which is kind of a negative. And like the forward looking for the month is usually positive, but the it's kind of like the buy the rumor, sell the news trade, where obviously we're hearing that it's opening back up, and long term it's a positive impact, but short term is going to have volatility impacts. Shit itself on that Friday. Oh, I mean on that Thursday,
Yeah.
and then Friday we got the rulings and everything else finalized and came out, but market straight through, and so it doesn't work perfectly, which is why I have the B setups as a portion of it. But
Yeah.
once whenever the 15-minute disagrees with the hourly, if the 3 minute shows confirmation, I fade it because there's honestly sometimes that we'll see reversals
Yeah.
and out, but it's only you only see it on a shorter time frame in the moment. So
Hmm.
that's why I'm still sticking to only trading the 930s because then it's like you can't. It really will expand. If you look at the red marking, so that's the New York sessions. Like all my back tests are showing up too. But literally, I can either decide if the hourly doesn't show, I can decide, and you can run this replay too. I can decide whether or not I want to trade it at all, or I'll just do minimize risk and figure it out from there. 8 o'clock. This is 9 o'clock. Let the other candle open. Right. This is 10. We go down to like 3 minute. Or 9:36 about. I like 9:36 as like a good time, but I also like 9:45 as a it's fully confirmed, like whatever way we're taking for up until whatever level.
Hmm.
And so it's 9:36 in this bar, 9:33 in this bar. We're at London and Asia lows, and we're looking to see if we either hold here for a support or bounce. But obviously, we're expanding from the volume point, so we retraced to the volume area, bounced into it. All of this volume is clearly showing that it's negative because buyers got
Trap
trapped above
buyers.
it. Sellers just spammed across that area and shot lower.
Hmm.
And we're seeing again, we then got some little bit of resistance and kind of popped back up here, but cleared again through the level. So that means sellers are stronger here, or there's higher gamma exposure for sellers here and
And
here,
sellers there. Yeah.
and we're about to blow through lows. So, and you can also look at the Markov models. This model already showing that we have negative sentiment, and then this transition period is
Into the
going into a
cross.
bearish state.
Yeah.
Simple as that. So, boom, 1 hour is still slightly positive. 15-minute is negative, and this one's in a negative transition phase. And the 3 minute is showing full on confirmations where they're also in a transition phase. So to be safe, again, this technically, again, math, and that's why I love this trading is trying to, we're trying to trade this as algorithmically or systematically as possible. To be fair, I should wait here, but if I'm being super antsy and want to enter right here,
Mm-hmm.
you can just take this trade regardless right now from entry, and then just look for a statistical place that makes sense to then put our stops at, or I mean, put our placements at. And here you can kind of see how many balances. One, two, maybe drop it a little bit lower if I want to be less conservative, but I want to get through the midpoint of as many points because that again just proves the statistical significance of that area.
Of the yeah.
1, 2, 3, 4, 5, all these different touches. So now I can cleanly say, hey, I might comfortably want to take my
Go
trade
short to the
until
next,
here,
yeah.
and then
Maybe leave a
here's a
runner.
safe place. Yep,
Yeah.
here's a safe place. Here's a safe place. So now
Yes.
I got my confirmation for where I want to have my trades to go into, and we can just check this ratio. Do one.
Fairs.
So we can take this. Take this with the
So you sold 10. Example.
take this with the back tester out order. Sell 10. We're gonna sell only 5 because this
Because you're
is
gonna
a.
scale in. Or is it because
Yep,
it's B
this is
plus?
a. This is a B. This is a
Oh
B
yeah.
setup. B plus
Okay.
setup. Yep.
And that's because
Got that.
one time frame wasn't correlated as well? Is that
Yeah, the 1 hour isn't negative,
okay,
so there's still risk there. The one
but the
hour isn't
15.
negative, and these also, yeah. And you see how these are also not fully,
Yeah,
or you
fully
see how
bearish.
sellers are in control. Sellers are fully in control. Like, I
Mm-hmm.
mean, like you can see it from here that then the price has its drop off from there. That's when they're fully in control.
So
We're
that area
transitioning into that
back to
point.
that.
We're
Yeah,
transitioning into it.
okay.
But we,
Okay,
you know what I
okay,
mean?
okay,
It's
okay,
not
okay.
confirmed, so we still have risk on the table.
Okay, okay. I'm getting it. I'm getting it.
So
I'm getting it.
target
Sure
here,
good, sure good, sure
stops
good.
are about here.
This is
And
like
yeah,
this is like an
confirm.
elite way of my strategy. This is like an elite version of my strategy.
Literally, and that's why I was saying I
It's
just wanted
actually
that foundation.
dirty, bro.
And
Actually
let's see
dirty.
what the price does.
Boom. Okay.
Comes up close to the SL again. Drops again, drops
That's
clean.
perfect. And I think that's because of
Up,
market open volatility as well, right?
up,
If,
yep. And even then, that's why I said you could. I should have waited. That's why
yeah.
it's a B plus.
Yeah,
I
yeah,
should have
yeah.
waited. And then
Okay,
now, if
okay.
it's strongly and simple as that.
Okay, 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 okay.
And then my way of refining it is like again, that's why I look like a crazy nigga
Yeah,
with
yeah.
my iPad. It's just numbers and like new shit or like patterns that I see. And that's done. That was last week Thursday. So say we did the same timing, got up on
Yeah.
the chart, literally would have ran the same shit.
Yeah, agreed. Agreed. Agreed, bro.
Textbook.
What the fuck? Wow. That's wow. Wow, that's nah, genuinely like I fuck with that. Definitely. Oh my God, I'm definitely gonna add that to my chart. I'm gonna have that as a secondary chart on
Yeah,
my
yeah. Let me
second
send you
monitor.
guys. I'll put that in the chat
Yeah,
so
definitely
you guys
do
can get
that.
all of these.
Once I get that payout and I get that premium, I get back on premium again. That's gonna be my second chart layout. That using that as well as a double confluence with me, with all the confluence I already have, just to get a confirmation with that model might not even be a bad idea. Because this model, for some odd
Simple as
reason,
that.
I don't know, but visually it's showing me exactly where to retrace to. Like it does it
Mm-hmm.
so perfectly.
Mm-hmm. And that's it's simple as that. I can wake up, and that's why like my goal has just been efficiency. My
Yeah, just
schedule
get
is
in, get
always
out, and
so
go to school.
fucked up.
Like, yeah, yeah,
Like
yeah.
school is the side project, bro. That shit is frying me.
Yeah, yeah, no, I agree. I agree. I agree. 100. That's kind of
I
what I
mean,
noticed recently. Like my trades have been like I've been catching trades before 10. Like and then I'm just in and out and
mhm.
I'm fine. You seeing this model like I'm kind of glad we kind of made this is low key like I'm not even like trolling because we like combine a lot of information. This is low key our own mech model. Like
That's
on
what I'm
on
saying.
on
And
some real
as
shit.
simple as that. That's our edge.
Yeah, that's low key our own mech model. We definitely like in a few days because I do want to make a video about this. I definitely want us to do like some maybe next week's meeting. I definitely want us to do some like crazy like strat breakdown of it, like both
Mm,
versions as well.
mm,
Definitely so we can kind of appeal to, those who are like in your realm of statistical version of it. Because all you
mm.
did was explain the mathematical side of what I'm doing as well. And it's just like if both work, Nah, this is yeah, 100
Yeah,
all
it's literally
100%.
if it ain't broke, don't fix it.
Don't
Simple as
fix
that.
it.
This makes sense to me. Your scalping and your ICT foundations make sense to you.
Yeah.
Why do I have you know what I mean? See,
Yeah,
and that's why I say
exactly.
it
And when
boils down to
niggas figured out how to
performance.
combine both. Like, hello, like
Simple.
it's crazy. It's actually sickening. I definitely will say, um, I like this strategy a lot. I definitely will be, I will be doing some more back tests. I didn't want to change my strategy for a bit as well till I get a
Yeah,
payout.
no, that's collect your data.
Yeah,
Collect your
exactly.
data. That's
I'm gonna take this strategy to my payout, and then I'm gonna get yours implementation added to mine as well. Cause definitely I can see yours as a dangerous swing. Like I can definitely see me using your strategy on some swing, like on a very crazy swing play. Seeing like good traps on the 1 hour and 4 hour. Like,
and why do you think I'm looking at dailies for Bitcoin? Why
yeah.
do you think I'm looking at dailies for your? You see what I mean? So it's like not only does that make my technical analysis so fucking crazy, it
Yeah.
just makes like the fundamental stuff so much more valuable because then it's boom, like my timing and execution is elite, but then my narratives are perfect. Plus,
Exactly.
again, like I'm saying, abuse perplexity because then
Cause you
now,
get
oh, I
all
need to
the
drop that in the opportunities chat
oh
because the
yeah,
data is there. It just it hands you that shit,
let them know. I'm
and now it's
soon.
like I have all of these expected values.
Soon, bro. Soon, bro. There's going to be like I'm going to make that Discord public. So that's why I'm telling you. I need you need to start
I'm trying.
information, bro. Just throw it because this Discord is gonna be like it's gonna serve as information. I want people to understand what we're making because this is dead the start of our own mech model. Like this is our own model, right? And I'm gonna be honest. I don't think I've ever seen anybody combine ICT with stats before. I'll be so honest. Like it's either you don't like ICT or you like ICT. You don't like stats or you like stats. There's no in between. And the
And
fact
that's why
that
I
I
took,
just
and
seen
that's
you
why I
like
said
yeah, that's
That's
like
why I said it. I was like, all right, as soon as I can at least pick off the parts that I said are statistically significant, I'm gonna take that and then just max this shit out.
yeah. No, I agree, bro.
Because and that's what being a quant is really. Every strategy is about finding the most obscure
So
random shit.
exploit the
I'm
shit,
just in my bedroom looking at data. You know what I
literally.
mean? So it's any type of kind of statistical edge you can eke out. It's clean and it's free.
Okay,
Again, the Bitcoin short is free fucking
that
money. I'm so mad.
I promise you, I get that payout and I have some capital, bro. Once you start throwing out option plays, some stock plays, bro, I'm just gonna passively just start funneling it in. Just I might even invite you to make it easier. But I will. Okay, next thing, and probably the last thing, only because I'm running short on time. I definitely have a lot of
Yeah, you're good,
schoolwork,
bro.
but schedule, trading schedule. Let's revamp. Let's get back on that as well. What are we looking at for
Yes.
availability? I cannot trade Tuesday and Friday mornings as of right now because of my class. So I tried to trade Asia session um the Monday before or the Thursday before. So
Thursday is still my most, but like it's literally an empty day that I make for networking, planning, and then trades.
okay,
So Thursday
Thursday.
morning's a definite.
Mhm.
Wednesday morning is a question mark. Like I won't. I'll be in the office. Like I work Monday, Wednesday, Friday, 9 a.m.s.
Yeah.
So the only thing is I'll like if I do join the call, I'll be mute, and then if
Yeah.
anything, I'll just kind of be like scrolling on my. It's gonna be weird,
No, no, no.
basically.
I fuck with that. Even if you choose to just join, that's also fine by me. Cause I do plan on fucking whatchamacallit. Like I'm trying to see if I can shift towards like streaming the trades as well. So even you just being there, like you can even just share your screen and have it set up while I'm trading as well. You take a trade. Obviously, like there's gonna be times where we may not take the same trade. So I really want that for like content, like like okay, two strategies that work primarily the same, they had opposite ends. Why did this work? Why did it? It just brings more data. That as well. I know Chigo. I know he said Thanksgiving break. That's when he's gonna get kickstarted. I will say, um, Thanksgiving break. If you are getting kickstarted, you gotta try to get funded in within. I will say, don't let your
Yeah,
funding take more than 3 to 5 days, or you're wasting your time. I will say
I
that.
hear that.
Like when
The
you're
goal, the goal is this week. The
like
goal is this week. It just really depends on what
yeah,
I hit
don't
on
even
cash.
if you and whatever you can do to make what I've been trying to do, what I've been doing on the side is that I would go DoorDash and make the amount of an account, right? So that
That's my
now that I've made it, right? If I'm wasting too much time, I need like, or if it's getting blown, I'm fine.
wait,
That's my mentality right now. I'm gonna get capital that can support account. So I will say for you guys, if you guys are fucking, if you guys are whatchamacallit, um, if you guys are, sorry, I lost my train of thought. If you guys are taking your evals, cannot be 5 days like Pat, like like 5 days should be the max. Like like
mm,
5 legitimate days, not holiday days, obviously. 5 actual days. Don't let it go past that. Especially now that alpha you could pass in one. Like so it's like, you know.
just save the time. It's time efficiency at the end of the day.
Mm-hmm. Evals aren't meant to be time wasted. You know what I mean? Like just punch in, punch out. I need it, bro. Jeff, once you get funded this week. Okay, let's go over goals. Let's go over goals and then we close out all that shit.
Yeah,
This week
fire.
funded. And I'm not saying rush
Yeah,
it, obviously. Like stick to your
just trade my setup.
trade the
Play my game, bro.
exactly. Do what you gotta do. I'm not rushing it, but you have a system. I definitely see this week looks jam packed. If I am not mistaken,
Mhm.
I did see a few things, and now the government's open as well, so we're actually getting actual news.
We're gonna get data.
So yeah, what is it? The week of the 16th, right? Okay, so Monday we already have FOMC off rip. Fuck, right?
Mhm.
With Empire State Manufacturing Index. Wednesday we're back to FOMC again. Thursday non-farm average unemployment, blah blah blah. Friday flat PMI, bro. We're back. We're back in
We're
business.
so bad.
So
And that's the thing is like we'll see this trade fucking exponentiate, especially Bitcoin too with the negative or all the tech correlations. We're gonna
hmm
see that shit die if
yeah,
the fiscal data is like even worse than we saw before before
it's
everything
gonna
else.
fall. And I have a
It's
feeling it's worse.
off.
I have a feeling it's way worse,
Oh, of
bro.
course, of course.
Like, but we're gonna. This is okay. So goals, I will say. I see myself getting a payout ending this week, but I'm not gonna put that that strictness on me. I'm gonna say payout by the end of next week. Definitely see that. Just with the opportunities I provide, I'm in and out. I'm scalping. See a payout by either Friday or next Friday. Cool. You pass by the end of this week. I will say your eval should not pass this week. Like can't lie. The only way this
Mhm.
eval is passing this week is if you're like fucking $50 off. Like that's
Yeah.
that's the only way that should be getting through this week.
Either I don't trade or it's some bullshit.
Or yeah, exactly. That's the only thing. Chigo, obviously he's not doing anything yet till spring break. You get to spring break. You get to Thanksgiving break. Once you get to
Thanksgiving
Thanksgiving
break.
break,
Thanksgiving break.
yeah,
Yeah.
Thanksgiving break, bro. Do not let your account. I'm telling you, especially for you because the way you should be playing because you prioritize your classes a bit more. The way you should be playing is only A+ setups and risk heavy. That's how you should be
Yeah.
playing. You should be playing like you get a
And
setup,
finding
like finding a strat
mm,
that's simple as well. Get something simple. Go on YouTube. I don't know. It could be stats. It could be ICT. It could be anything. Get something that is repetitively working, bro. And on your eval, I'm not even joking. You see an A+ setup that week, risk heavy, bro. And because you're because knowing you, I don't think you will be trading all 5 days when school starts back
Yeah.
up again. So you just need something that can get you in and out of the markets very quickly. You don't have to waste time. Something you can put down and just go. So that I will say for your eval, do not because you let that shit drag out, you're gonna lose motivation into it, and then it's like you come back to school with the
Yeah.
eval. Like you don't want to come back. Not that I'm saying rush it, but at the same time, just in my evals, I was risking like crazy. I went from 1 minute to 2 minis, bro. Like I was trying to get. Once I knew I had an A+ setup, I was risking heavier. Like I would scale in because we have too much time to burn. We're trying to look at a good close for quarter four. Let's be honest. Like my goal in my
I
head is
got
still
you.
having a good conclusion in quarter four, so that we can go have that meeting, that recoup, the same meeting we had in the summer. I want us to go back, do that, and redo our portfolios from scratch again, just so we can. Because now that we see there's a new fucking like the way the market's moving, like shit is changing, right? So obviously I want us to have that portfolio movement back into quarter four, at least, or starting quarter one. You know what I mean? So we can start off the year
yeah,
strong. Bro, it felt like we just started 2025. It's already like basically December, bro. So we just gotta we
Basically.
got we gotta punch in. And I know like co-ops and internship we're still doing that shit, but we're busy people. We're all on respective e-boards, so we get our shit done. Do what we gotta do. But yeah, I got to dip. Great work. Awesome
Good
work.
session.
Strategy testing all week. Stick to our goals. I'm going to be trading every day except every morning except Tuesday and Friday, like I said. We'll be doing gold session Monday night and Thursday night as well. Those are the only times I will be trading Asia session as well. Look out for that. And yeah, so y'all, you guys have a blessed night.
All right, good work,
Sleep
boys.
well, do your homework, don't die, bro. Like school's fucking.
Don't
Nah, school's fucking niggas, bro.
die.
School's fucking niggas, bro.
Oh, look,